All right. As I mentioned, at the very end of December, President Trump signed the latest stimulus bill after threatening to veto it, and part of that was additional included PPP funds for both first and second PPP loans. So I don't know if anybody on this call, on the Zoom hasn't had a first PPP loan, but that program to get a first PPP loan was closed in the early autumn, but you can actually apply for a first PPP loan if you didn't get one in the spring or the summer. I know many Concord businesses did get a first PPP loan, and now they should be eligible, or many of them will be eligible to get a second PPP loan. There are narrower eligibility requirements, which we'll discuss. In order to get a second PPP loan, you do need to have had a first PPP loan. And you will have had to have used or will have used all of the proceeds of the first, what they call a first draw loan, prior to the expected date of disbursement of the second PPP loan. Now, as far as narrower eligibility, the employee cap, in the first PPP loan, a business could have had 500 employees. In order to get a second PPP loan, generally the employer can only have 300 employees. And most importantly, the business needs to have shown a 25% reduction in gross receipts between one comparable quarter in 2020 as compared to that same quarter in 2019. We'll go into that those rules a little bit. There's some nuance involved. Now, those loans are open now. Generally, a week ago, everybody could apply for that who was eligible. And it's open through March 31st, 2021. I know there was a giant scramble last spring to kind of, get first in line to get those. The estimates are that there should be enough funds to last. And so, maybe there isn't a panic this time around to get your application in so early. But, who can tell? So, there's basically a little bit over 2 months left to apply for a second draw loan. Now, you can only get one second draw PPP loan. And another requirement is that the business could not have permanently closed. However, you could have temporarily shut down or suspended operations. So one of the big questions has been, okay, how does this 25% reduction work? And basically, if we can go to the next slide, some questions have been, hey, can you just pick a 90-day period and compare those two 90-day periods between 2020 and 2019? And the answer is no. You need to pick an actual quarter. So, for example, January 1st to March 31st, and compare that period in 2020 to 2019. Alternatively, if it is easier, what you could do is just look at all of 2020 and compare that to all of 2019 and use something like a tax return to show that 25% reduction. There are special rules that deal with businesses that were not open for all of 2019. Maybe they were formed in the middle of 2019. And for seasonal businesses. I'm not going to get into all those details, but there are special rules that exist in those kind of circumstances. And the guidance provides an example. So a borrower with gross receipts of $50,000 in the second quarter of 2019 and gross receipts of $30,000 in the second quarter of 2020 has experienced a revenue reduction of 40% between those quarters and is therefore eligible for a second draw PPP loan, assuming all the other eligibility criteria is met. Next slide. So there have been questions that come up as far as, well, okay, what is gross receipts? And you know, this slide here even kind of makes it a little bit simpler than the rules that exist. But basically, you can think of it as all the sales of the business, as well as income from other things like interest, dividends, rents, royalties, commissions, but not including returns and allowances. One other thing that is kind of not included is capital gains, which could impact, you know, some folks. You would not include things like sales tax if you did collect that. You would not include affiliate transactions. And if you were something like a real estate agent, you wouldn't count things like, you know, escrows or deposits held. Other things that you would include are things like subcontractor costs. So for example, you know, if you're a contractor and you could have your customer go and buy something that you install, or alternatively, you could buy it and just kind of include that in their bill, you would include the full gross amount in your gross receipts. So you also would include in an applicant the income of their affiliates. So you would aggregate together affiliate revenues. You would, however, not include forgiven PPP loans and idle advances if you receive that.
Okay, we did just a question come in, which I think you answered, but does the quarter by quarter comparison have to be traditional calendar quarters, or could it be like any 3 months?
No, it has to be traditional calendar quarters. All right, and so it's similar to the first draw loans. To calculate the maximum loan amount, it would be 2.5 months of average monthly payroll costs. However, there are some exceptions to that. And in order to calculate, well, what is your payroll cost? You could use either 2019 payroll costs or 2020 payroll costs, or technically you could use the 12-month period prior to when the loan is made. So if you applied March 1st, you could have the period March 1st, 2020 to end of February 2021. A little more complicated to figure that out. So there's some slides that are in here that I can share with others. Last spring, when the guidance was coming out, everything was very rushed. It was a brand new program. People were overwhelmed. This time around, thankfully, they've pushed out guidance much more quickly, and they've provided a lot more detailed guidance. So I have some slides on how to do some calculations, but I'm not going to go into it in great detail because there are some really good resources that walk applicants through step by step how to do certain calculations. For example, how to do the revenue reduction calculation, and most importantly, how to calculate what their maximum loan eligibility amount is and what their payroll costs. Keying into tax returns and exact line items on tax returns. So if anybody has any question about that, I'm happy to kind of share that guidance with everybody. But there are different rules for how to calculate what the maximum loan amount is if you are a self-employed individual filing a Schedule C and do not have employees. Next slide. Or if you are self-employed and you do have employees, and this could be something like a single member LLC would follow into this as well. And next slide. And then also, if you're a partnership or an LLC that has multiple members, there's, again, detailed rules now to how to make these calculations, keying in to various lines on the tax returns that have been filed in past years, or the drafts for 2020. All right, as I mentioned, there are some special rules geared to hospitality businesses. They've been hit, much harder than some other businesses. So instead of having a 300 employee cap to be eligible, it is 300 employees per location. I don't know if that really affects too many of the Concord Chamber members, but that is a rule. But very importantly, instead of just being eligible for 2.5 months of average payroll costs, those types of businesses are eligible for 3.5 months. So that should be a good help for them. As far as the rules go, it's similar rules to the first draw PPP loans. There's no collateral required. There's no personal guarantees required. The interest rate, which hopefully interest will never be repaid because it'll be forgiven, 100 basis points or 1%, 5-year maturity. Again, hopefully it's forgiven before that time. And the same types of forgiveness rules apply to these second draw PPP loans. Now they have expanded the uses for PPP loans. So still you could, you need to, in order to get full forgiveness, use it for payroll costs, but they have clarified what some of these payroll costs are. And they've made it clear that you can use them for group life, disability, vision, and dental insurance. So that's great clarification. You can still use it for interest on business mortgages, for rent, utilities, and other debt obligations incurred before the covered period. And they've added some new categories for what PPP can be used for. You still need to use 60% on payroll costs to get full forgiveness, but for that other 40%, you can now use it to cover quote unquote covered operations expenditures, where it seems to cover quite a bit. Certain business software, payroll processing, human resources. It's very vague. I don't even know what that is supposed to totally cover. Sales and billing functions. Again, it seems like it could cover a lot of things. Accounting costs. In addition, covered supplier costs. These are supplier payments that are essential to the borrower's operations and were made either pursuant to a contract order or purchase order in effect prior to the covered period, or with respect to perishable goods pursuant to a contract order or purchase order before or during the covered period. So if you are in the business of selling stuff, or if you're a restaurant and ordering food, it seems like it would cover a lot of that, potentially. In addition, now included are covered worker protection expenditures. There's a lot of stuff here that they're using as examples. Improvements to ventilation or filtration systems and physical barriers, health screening capabilities, and importantly, personal protective equipment. So, they really want, they don't want anybody to do their calculations and say, oh, I didn't use my PPP loan on eligible uses. There's a lot here that you can use them for. In addition, now is covered property damage costs. New Hampshire, fortunately, didn't really experience a lot of looting and vandalism from protests last year, but that was thrown in there as a good use as well. So in applying for a second draw PPP loan, there's a couple of documentation issues. Okay, first is similar to the first draw PPP loans, calculations relating to payroll. Now, there's a very useful rule here that if you use in your second PPP draw, if you use your 2019 payroll to do the payroll calculation and you use the exact same lender, you don't need to submit any additional documentation for the payroll calculation. That can be very helpful to borrowers. In addition, in order to demonstrate the revenue, the 25% or greater revenue reduction, if your loan is, the second draw loan is greater than $150,000, you do need to submit documentation at the time that you submit your application showing that. And you can include tax forms, including an unsigned, a signed but unfiled 2020 tax return, or similar, financial statements, bank statements, et cetera, to show the revenue reduction in at least one quarter of 2020 compared to 2019. If the loan is for $150,000 or less, however, you do not need to submit that documentation at the time that you submit your application for the loan. Instead, it needs to be submitted by the time you apply for loan forgiveness. So that should really speed things up for smaller borrowers who are willing to use the 2019 payroll and applying for 150,000 or less. Really, there's no additional documentation needed right now, just to submit the actual application. And again, I'm not going to go, this slide is there to help anybody. If you want to apply for the second draw PPP loan and you want to go with a different lender, or you did not want to use your 2019 payroll costs, there are very clear, and well, I don't know how clear, but they're detailed instructions on how to do the calculation of your payroll costs. And it will differ depending on whether it's a self-employed Schedule C filer, or with employees, without employees, or another type of taxpayer. We can kind of skip ahead a few slides till we get to the actual loan application. So like the first draw PPP loan, there are a number of certifications that will need to be made. I know there were a lot of questions back in the spring, especially about the certification that is current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. It's as vague as it was back in the spring, and you have to be comfortable making that certification. I have heard, from New Hampshire's SBA, they are very much encouraging people to apply for these. I know that some potential borrowers do struggle with making that, especially if in the second half of 2020, their business really turned around. Technically, they would probably be able to meet that 25% reduction test based on the first or second quarter of 2020. At least our local SBA folks are saying, don't let it stop you that you had a really great fourth quarter. Don't let that prevent you from applying for a second draw loan. Other certifications, have to be made, including that you're going to spend the funds on the eligible uses, but that now includes operations expenditures, supplier costs, the PPE. One other nuance is that you have to certify that you're not going to get a shuttered venue operator grant from SBA. So that would kind of exclude some potential second draw borrowers. Now, if anybody else has any questions, I kind of went very quickly over, especially how to do some of the calculations, and I'm happy to share, that, SBA guidance on how to do that. But I'd rather spend a little more time on Q&A to the extent people have any questions.
So just a reminder for people, you can submit a question if you click on Q&A and just type it in. I do have a question for you guys because I was recently helping to host another webinar with Checkmate Payroll Services about the employee tax credit. So they talked a lot about planning your PPP and amount and planning to spend close to 40% on those other non-payroll items. Do you need to know that well in advance? It sounded like you don't need to until you apply for forgiveness. Is that right?
Well, I mean, I think most borrowers are hoping for the forgiveness. So I would certainly have a plan in place to say, hey, we want to, it's not just that we want to borrow this money, but we want to have a plan to spend it in a way that's going to enable us to get, 100% forgiveness or something close to it. So, I think it would certainly be wise to kind of have that plan in advance before I got, the loan disbursement from the bank.
Yeah, makes sense. That was a great overview of PPP. It's a very confusing, there's a lot into it, and you guys simplified it. For those of you watching, we will send these slides to you so you can go back and read in detail all of everything that Tony outlined here very carefully.
And Emily, just a note, Tony and I both have our contact information on the last slide. If people do have any questions, they can reach out to us after too.
Great. So I will go over some quick chamber news real quick, but you guys can continue to submit questions if you have any. Feel free. Let me just get this screen share going. 1 second. All right, I just want to let you guys know about some stuff going on here. Tomorrow, we're having a virtual member briefing. This is great if you are a new chamber member or looking to become a chamber member. It's kind of an overview of the programs we offer, the benefits for you as a member, all of those things. It is a Zoom meeting, so there's a lot of discussion, a little bit of networking, which is great. This Thursday, we have a webinar about vaccine rollout. So that's a great one to tune into if you're interested in that. Our Citizen of the Year nomination deadline's coming up. This is our biggest honor of the year. So if you know someone who during 2020 really stepped up in the community, we encourage you to submit that. And then if you have not tried our virtual networking events, I definitely encourage you to check them out. They're a lot of fun. We put you in smaller breakout groups so you can socialize with a little group of people. It's manageable. And you can do it from the safety of your home or office, whatever works for you. So that's my news here from the chamber. I don't see any questions at this point, but we will share with everyone who registered Tony and Lindsay's contact info so you can follow up. The slides will have a recording of today's session. Anything else you guys want to add today?
Yeah, just reach out if anybody has any questions.
Thank you, Emily, for all of your help.
Yeah, thank you so much for being here today. Thanks for everyone who could join us.
Take care.